Hello everyone, welcome back to today's live stream. I'm so excited to have you guys here and I'm really looking forward to diving into some fascinating market analysis with you. I know it's busy time of the year and it's great that you've taken some time to join us. Whether you're here for the latest on Bitcoin, big moves, some insight into Amazon's new chip releases, or you just want to catch up on the stock market action, you're in the right place. We'll be covering a lot today, so get comfortable. While we wait for a few more people to join, feel free to drop a hello in the chat. Let me know where you're tuning in from. And if you have any burning question, now is the time to ask them. I'm so happy to interact with all of you before we jump into the main discussion. If you're new here, welcome to the stream. I'm Herdaily Trades, and I'll be your guide through today's analysis. We'll be talking about the latest moves into the market. One moment, my mic is not working. We'll be talking about the latest moves in the market, tech trends, and of course, the big impact of the Federal Reserve's action on everything from stocks to crypto. Okay, let's see. Is there any feedback on this? Any questions? If not, I'll move on first, and later when you have more questions, feel free to let me know. All right. I see some familiar names and a lot of new faces. Welcome, welcome, and thank you for joining. We'll be getting started in just a few minutes. But in the meantime, feel free. One moment, mic error. Feel free to grab a drink, settle in, and make sure you've got your questions ready. It's going to be a great session, and we have a lot to cover today. We'll be kicking things off by talking about the Federal Reserve's latest moves and how they're impacting the market. But I'm also curious to hear your thoughts. What's on your radar right now? Are you more focused on tech stocks or maybe the big swings in the crypto? Let me know in the chat, guys. I'm really interested to know what you guys are having on your hands. If you're watching this on replay, don't worry. I'll be posting a summary of all the key points covered so you won't miss anything important. But those of you who are here in the live, I'd love to hear your thoughts and feedback as we go along. All right, I think we got everyone who's going to join us today. So let's get started in just a moment. Thanks again for being here. Let's dive right into the market action and see what's going on with Bitcoin, Amazon's new chips, and more. So we got a lot to cover. Recent moves by the Federal Reserve, a sharp rebound in Bitcoin, a big chip news drop from Amazon Web Services, and fresh development in major tech and AI-related stocks. In the next 2 hours, we'll break down what's driving markets right now. So, if you like, drop your question, comments, and I'll try to answer them live. Let's dive right in. First, the Fed has made a very significant move. As of December 1, it effectively ended its tightening cycle and executed a large overnight repo liquidity injection of 13.5 billion USD into the system. Analysts note that this one is the biggest injection since the COVID era, a clear signal that liquidity is coming back. So, what does this mean? Liquidity is returning, tends to benefit assets first. Equities, growth stock, and yes, even crypto. Short term, what this will bring back sentiment, thus we often see quick rebounds. And in the long term, liquidity injection continues, we may be entering a new bull phase. If it's one-off, treat it as a sentiment recovery. So what may be the implications of this? Sectors most sensitive to liquidity like tech, AI, semiconductors, growth ornament stocks, and crypto are likely to see the first lift. So aka, that set the stage for what we saw in crypto and risk assets yesterday. Which leads us to our next segment, crypto. Why Bitcoin and crypto rebounded. Yesterday, we saw a dramatic rebound in crypto. According to market data, Bitcoin surged to the highest surge past 90,000 in one of its strongest up moves in months. Other major assets like Ethereum and XRP also posted solid gains. And this rebound came right after a period of heavy liquidations, meaning many shorts positions got wiped out, and that triggered a short covering rally. So what drove this bounce? Two main factors. Macro liquidity returning thanks to the Fed, risk on flows, capital rotates into assets like Bitcoin. So, as we can see this chart, yesterday the top that was hit was $93,000. However, it closed just a little bit under at 91, but it still broke the 90,000. So is this a bottom reversal or just a bounce? It's hard to say yet. From a technical analysis viewpoint, some believe a sustainable bounce needs a clear breakout or of prior downtrend zones. However, from a macro viewpoint, as long as liquidity remains supportive, crypto has tailwinds. So what are the risks to watch out for? Number one, high volatility remains, and if liquidity conditions change or risk sentiment shifts, crypto could retrace again. So what do you think? Bullish on BTC, medium term, or still too risky for you? Write in the comments. I want to know. So now let's focus on to Bitcoin's price surge. What happened? And what is the support line that we're supposed to look out for? So yesterday's big rally, Bitcoin surged by about 7. One moment, Ara. BTC surged about 7% yesterday. 7% yesterday, reaching levels, significant price jump as well. This has been seen as a potential reversal of its recent downward trend. So, why is the surge? Liquidity injected by the Fed, the Federal Reserve's recent decision to inject liquidity into the financial system has had a direct impact on risk assets, with Bitcoin leading the charge. So another thing that also affected was the weakening US dollar. With the Fed injecting liquidity, the US dollar weakened, pushing more funds toward riskier assets like Bitcoin. So it also was the end of a crypto liquidation after a prolonged bear market. Liquidations of crypto assets has most been completed, and many market participants are now looking for opportunities to buy the dip in anticipation of a rebound. So, is this the start of a new market trend? Well, the market sentiment shift. The question on everyone's mind is whether this surge marks the beginning of a new bull market, or is it just a short-term rebound? Many analysts believe that this movement is more than just a blip, especially if the Fed continues its liquidity expansion, which would create a more favorable environment for risk assets, including Bitcoin. So what are the key price levels to watch? In my opinion, what we want to watch, and according to other analysts, what we gotta watch, key level to watch will be $94,600, which will be around here. So if Bitcoin can break above this, it might signal further upside potential. If Bitcoin can break through here, it might signal a further upside potential. However, if the price fails to break through, a pullback could be on the cards. What is driving the Bitcoin rebound? The Federal Reserve has reversed its tightening policy, leading to a surge in liquidity within the market. Historically, when liquidity increases, risk assets like stocks and crypto tend to benefit. And the influx of liquidity has led to a short-term sentiment boost, with risk assets, particularly tech and crypto, experiencing a surge in demand. So, institutional investors who had been cautious due to previous market volatility are increasing risk-taking as they look for potential short-term profits before the year ends. So, what is the technical outlook for Bitcoin? Bitcoin's technical structure, while Bitcoin has shown a strong rally, it hasn't yet broken through its downward trend line. Technically, this means there hasn't been a definite trend reversal. So, watch for Bitcoin's performance around the $94,600. Watch for the key resistance. This could be more than an upside potential. Risk of a pullback. If Bitcoin fails to break the upward momentum and falls below its current support levels, which will be here in the short term and here in the long term, then correction or consolidation could occur, and before any major upward movement. Okay, so let's see the bigger picture. Will the trend hold? The overall trend for Bitcoin depends largely on macroeconomic conditions. If the Fed continues to inject liquidity over the next several weeks, Bitcoin can remain bullish in a bullish phase, but market volatility will likely continue. While short-term outlook looks favorable, the sustainability of Bitcoin's rally will depend on broader economic factors such as the Fed's future moves, global inflation, and risk appetite for institutional investors. So, let's look at the long-term outlook for Bitcoin. BTC as a store of value, over the long term, Bitcoin remains a highly speculative asset, but it's increasingly seen as a digital store of value or hedge against inflation, similar to gold. Institutional adoption, regulatory clarity, and technological developments such as Bitcoin's Lightning Network could further support its rise. So, as always, Bitcoin's volatility remains a key consideration. While it can have dramatic price swings in the short term, its long-term growth story remains intact, especially as more institutional investors and everyday traders continue to adapt the asset. So what are some key takeaways for Bitcoin right now? So Bitcoin's price surge is driven by liquidity injections and favorable shift in market sentiment. So we could also be seeing the beginning of a new market trend, but Bitcoin still needs to break through key technical levels to confirm this. As mentioned, the 94,600 is something you guys should be watching out for. So, as long as the Fed continues with its liquidity injections and institutional risk appetite remains high, Bitcoin is likely to see continued bullish pressure. And the $94,600 level is crucial for Bitcoin's potential breakout, but a failure to surpass this could signal a pullback. So, Stay tuned for clearer signals before making any major trading decisions. Bitcoin's volatility is likely to persist, so cautious optimism is key. Let me have a sip of water. Now let's jump. Sorry, before I jump to the next one, do you guys have any questions? Let me know. I'm very interested to know what you think about Bitcoins and the price surge yesterday, 7%. Any Bitcoin holders here sold? Are you guys still holding? Did you guys buy more before that? Let me know. So, now, big news in tech infrastructure. AWS just announced major updates. Their next generation AI chip lineup is reshaping expectations for cloud AI infrastructure. Let's look at some news. Amazon to use NVIDIA techs in AI chips to roll out its new servers. So, AWS Cloud Computing Unit on Tuesday said it will adopt key NVIDIA technology in future generations of its artificial intelligence computing chips, as the firm ramps up effort to attract major AI customers to use its services. So, Amazon Web Services said it will adopt technology called NVLink Fusion in future chips known as Trainium 4. So they did not specify on the release, but this is something big to take note on. So, according to reports, AWS will integrate NVIDIA NVLink Fusion into future AI chips, example the Trainium 4, to boost inter-chip communication speed and power rate-scale AI servers. They are also rolling out servers using Trainium 3 chips, which reportedly deliver 4 times better performance than previous generation while consuming significantly less power. So, about Amazon. Why this matters? It accelerates the move away from GPU-only AI compute, and cloud providers are diversifying. So, training large-scale models becomes cheaper and more efficient. That pushes AI adoption lower down the cost curve. Investments focus may shift from just raw compute power into AI application ecosystems. Deployment efficiency and infrastructure will scale. So, let's look at one more before we move on. New AWS AI factories transform customers' existing infrastructure into high-performance AI environments. So what are some key takeaways? AI as dedicated infrastructure combined to the latest NVIDIA accelerated computing platforms, Trainium chips, AWS AI services, AWS high-speed, low-latency networking. So customers can leverage their existing data center space, network connectivity, and power while AWS handles complexity of deployment and management of integrated infrastructure. So, this is very important. So, what should you watch next? Companies building AI-powered services, cloud service providers, chips, and semiconductors firms positioned as AI infrastructure enablers. So what is the translation of this? And what is the transition? That brings us nicely to a discussion of some individual stocks that may ride this wave. So let's look at a few. Let me just delete. Yes, I was doing some work earlier. AWS is revolutionizing AI infrastructure with their new next-gen AI chips, which will transform the performance and scalability of AI workloads in the cloud. So what is the biggest update? AWS is integrating NVIDIA and NVLink Fusion into their future chips, like the upcoming Trainium 4. So why is this important? NVLink Fusion is a technology designed to dramatically boost inter-chip communication speed, making it possible to scale large AI servers much more efficiently. Especially, this is going to enable AWS chips to handle far more complex AI models and provide faster processing times for machine learning tasks. This is huge news for anyone running large-scale AI projects in the cloud. But it doesn't stop there. AWS is also rolling out Trainium 3 chips, a next-gen upgrade to their previous AI chips. These new chips reportedly deliver a 4x performance boost compared to the last gen, while consuming significantly less power. Think about it, 4 times the power, but with much less energy consumption. This is a game changer for companies looking to scale their AI infrastructure while keeping costs under control, especially when it comes to power consumption in large-scale AI operations. If you're in the cloud computing or AI development space, this could give AWS a huge competitive edge. So, just a little bit more. AWS, this move cements AWS position as a leader in cloud AI infrastructure. The fact they are integrating NVIDIA's NVLink Fusion means AWS is pushing their own custom chips even further, offering businesses faster, cheaper, and more scalable AI infrastructure. This could mean long-term growth for Amazon Cloud Services. So watch for potential upside in Amazon stock. NVIDIA, on the flip side, NVIDIA's dominance in the AI chip market could face pressure. AWS move to develop their own Trainium chips and integrate NVLink Fusion could mean less demand for NVIDIA's GPUs in the long run. Keep an eye on NVIDIA stock. A shift in demand for AI hardware could cause short-term volatility, especially if AWS chips perform at scale. To wrap it up, AWS next-gen AI chips are changing the game for AI in the cloud. The integration of NVLink Fusion into Trainium 4 chips and then rolling out Trainium 3 with better performance and lower power usage signals a massive leap forward for cloud AI infrastructure. For investors, this could mean big moves for Amazon, while NVIDIA might face some short-term turbulence as AWS chips gain traction. So, stay tuned for the updates as we continue to watch how these announcements shape cloud AI landscape in the coming months. Alright, if you got any questions about AWS, new AI chips, or how this affects the tech market, feel free to drop them in the chat. Let's discuss. Alright, thank you guys for interacting with me. Now, let's look at Marvel. So, let me just hide this. Let me see why it's not working here. Okay, it's working here, so I'm not sure why it's not working in another place. This is from yesterday's live, guys. I'll look at it on the daily. I think it's easier to understand. Okay, so let's look at Marvel. Pull the time frame up. We'll go on the weekly chart. Okay, let's see. Now I reloaded it. Let me go on the weekly chart. And let's see what we're looking at here. Back to the daily. I'm not seeing what I want to be seeing here. Okay. So what we're looking at here is, let's start with Marvel Technology. Last quarter, the company delivered some strong results. Their quarter 4 2025 revenue hit 1.8 billion, up around 27% year over year, with a 78% surge in data center revenue. That's a key takeaway. Marvel's data center business is on fire. Now, what really stands out? Their custom AI silicon programs have entered volume production. This is a big deal because it signals a shift from just design wins to actually scaling their production. While we're talking about key inflection point in their AI capabilities, looking forward, Marvel's guidance for Q1 quarter 1 of 2026 is solid, and they expect strong growth to continue with the demand for AI infrastructure on the rise. Marvel seems well positioned to capitalize. So, what we can see from this chart here, if Marvel to be hit the top of the funnel right here, then we'd be expecting a possibility of a downfall. Why? Because However, if it just touches back to this line right here, where my mouse is currently, then it's a possible call for you to buy. Why? Because for the previous few the higher lows indicate a pattern that we're seeing here. I'll make this bigger so it fits right in. Do you see a pattern? Goes down, goes up, goes down, goes up. So, but here's why there's caution and why we need to look at it more seriously. Valuation might already be pricing in high expectation. If there's a tech correction or if AI spending slows down in the near future, stocks like Marvel could face volatility. So, while it looks great long-term, short-term risk should be considered. Now, let's move on to everyone's favorite stock. By the way, guys, if you have any questions about Marvel or if you guys can share anything with me, let me know. I'm interested to know what you guys are holding, what you guys are thinking. Now, if you have no questions, let's move on to a lot of people's favorite stock, Tesla. Now, let's talk about Tesla. Right now, Tesla's price action seems fairly stable, I would say. And despite the continued presence of short-term sellers, history has shown that these periods of heavy short interest have preceded significant rallies in Tesla's share price, something we've discussed in previous analyses. From technical standpoint, it looks like Tesla is forming a consolidation phase. Let's take a look. So, from Tesla's standpoint right now, it is kind of looking like a consolidation phase, like it's building energy for the next leg up. For those of you watching Tesla, this could be an important period where the stock is potentially gearing up for a breakout. However, a caveat to keep in mind, timing is everything here. External factors like overall market sentiment and macroeconomic condition could derail any momentum. So, for those looking at Tesla, it's more of a watch momentum than a jump in now. So, as you can see here, we're in a ziggy-zaggy pattern, which could be good for us. And we were also in a stable pattern here. I think for Tesla, we're looking at a healthy basis. So, for those who are looking at Tesla, it's more of a watch moment than a jump in now. So, for those of you who are bullish on the long term, I'd say don't rush into one just yet. Patience is key here. Tesla's volatility nature could see big swing in the short term. So, now we'll move on to Apple. Let's talk about Apple. Apple has been on a healthy uptrend for quite some time. Let's look at Apple. Apple has been on a healthy uptrend for quite some time now. As we look at this funnel, it continuing to trade inside a solid ascending channel. This is the channel we're talking about. So this is something we'd like to see in a strong bull trend. This is something that may indicating a strong bull trend. In fact, some analysts are speculating that Apple could break out towards the $300 level in the near future, which could be a big move. Some analysts are expecting Tesla to hit 300 in the near future. This is the goal for many investors currently. Which is really a possibility if we're gonna see this type of move. Oh, sorry. Let me do that again. This 300 with the possibility of movements like this is possible within just a short period of time. So that being said, valuation has definitely crept up, and with the stock already in an uptrend, this may not be the ideal entry point for new investors in the short term. For those of you thinking long term, though, Apple's fundamentals remain solid, and this could be a great stock to hold in a diversified portfolio. Patience could pay off for those who are willing to wait for an optimal entry point. Right now, it's above an entry point price that I would recommend. So wait for a more attractive price. So now, putting it all together, I think we could be seeing the start of a liquidity-driven multi-asset rebound where everything from equities to AI-related tech firms and even risk assets like crypto could benefit in the tandem. But for this to be sustained trend, not just a short-term bounce, we need to watch two keys. Does anyone know what those keys are? So, what are the few keys we got to watch to confirm this is not a short-term bounce? Anyone knows? Comment down below, but I'll share my answer with you guys. Number one, continued liquidity support. I hope some of you got that right. Liquidity support. So this means more Fed-driven or institutional-driven liquidity injections. We got to pay attention to what the Fed is doing. So, what is number two? Anyone? Real world Real world executions. So what is this? We need to see actual earnings growth, the real world build out of AI infrastructure, and increased adoption of cloud AI services. In other words, we need to see the AI hype translate into tangible results for the companies in this space. So, here are the four key sectors and assets to watch in my view. What key sectors and assets to watch? My POV. Number 1, AI. And also let me know what you guys are watching. I want to know as well. These are just some of mine. AI infrastructure and semiconductor firms. So, what do I mean by this? This means when you think of semiconductor firms and AI infrastructure, think Marvel, Nvidia, and other upstream suppliers in the AI chip space. Anyone that supplies, watch. It is also important that you pay to energy companies, solar companies, anything in the power and energy field is very important and key now for making decisions. So, number 2 that I'm watching out for is cloud, AI, and AI application space. So what do I mean by cloud AI and AI application place? Especially companies leveraging next gen chips like AWS new lineup. So why this is important? When companies like Amazon are rolling out new gen chips, Trainium 3 and 4, these are key market movement that may cause a big rally to create a new market trend. So why this is important is because these moves have very big effect on the market. Number 3, risk assets, maybe crypto and growth stocks. These may be ready for volatility if things get choppy. So when like the USD went down, then people rush to buy Bitcoin. Number 4 that I'm watching out for, companies with stable fundamentals but still plenty of growth potential. So what I'm doing is undervalued stocks or stocks that haven't risen to their full potential. So this may be stocks like Apple, Tesla, and others. So for investors and traders alike, this could be a fertile period, but discipline is key. Make sure you're watching valuations, entry points, and keeping an eye on macro signals like the Fed and overall market sentiment. So, all right, now it's your turn. Drop your question in the chat about crypto, tech stocks, macro outlook, or anything I didn't cover. I'll take as many as I can in the next 10 minutes. As a quick poll for all of you, do you think the Fed liquidity injection is just a one-time bounce? Or are we looking at the start of a multi-month bull run? So, write A for one time or B for bull run. I'll share my thoughts after we see some of your words come in. Let me know what you think. Is it a one-time thing or do you think this will be a bull run? All right, I see some of it's coming in. So here are my thoughts on this. First off, the Fed like injecting one. I think this could be the start of a bull run, but with a few caveats. The Fed's liquidity injection is a big boost, and if it continues, we could see sustained momentum, especially in tech and AI sectors. However, the Fed's future moves and overall market sentiment are key. If liquidity dries up, or if we hit a macroeconomic bumps, we could see a quick correction. So while I'm leaning towards a bull run, it's not a guarantee. Just keep an eye out on how things unfold. So, summary and some key takeaways from today, what I think. Marvel, strong growth, especially in AI, silicon, and data centers, but watch valuation for potential volatility. Tesla, stable, but forming a consolidation phase. Wait for further growth or external catalyst before jumping in or making any unverified decisions. So Apple, healthy uptrend, but be cautious of valuation. Long-term investors may want to wait for a better entry point. And lastly, outlook. So what is my outlook? We're in a potential multi-asset rebound phase with AI, cloud, and tech stocks as major beneficiaries. But timing and liquidity will be critical for a sustained rally. So, if you have any questions, drop them down in the chat. I'll be happy to answer or discuss with you guys. If there's nothing, it's also fine. Let me know if you like today's live. And all right, folks, that's all we've got for today. Thank you for tuning in. It's been a great discussion. The latest market trends and stock updates with all of you. Remember, keep an eye out on those key sectors. And as always, stay smart with your investments. Don't forget to like, share, and subscribe if you want more insights in the future. Until next time, take care, stay safe, and as always, happy trading. Bye-bye.